It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Light Forex Social Trading. Spend your time doing what really matters to you.
Welcome in our second part of today's meeting. Euro is going lower, pound is holding ground well. I missed this short opportunity here, but there is a chance we are going to see some kind of the bounce from here, maybe, right? There is probably some stops below based on what we've seen previously, all right? And maybe we are going to see rally back, this time towards 88.72, 75. That's where I'm gonna to look for eventually for selling opportunity. We'll see. It's quite aggressive sell-off, so looks like the levels we were discussing related to the weekly open, somewhere closer to 88.35, might be in play later today. So that would be nice trade. We'll see. It looks like I have to revise my euro dollar as well. The biggest mistake I made with this trade is here. Once I saw the initial reaction around 75, the most important thing is that it was reaction related to the higher time frame level, right? So this one here, and that's something we are going to discuss during the webinars in June. And just a reminder, we have 3 of them, and the first one is next Tuesday. So that was the opportunity here. I've been waiting too high. But anyway, we are getting lower and lower. So in that case, 12.15, if you remember, that's the level where we might see another bounce, right? And if that happens, some levels related to this day open, levels related to 12.43 might be in play. Let's watch for a second this euro dollar here. Looks like we are in a rush to hit this 12.15 ahead of the Powell. I like these levels a little bit below, towards 80-70 on euro dollar, more than 12.15. And we have to watch just from the 1-to-1 perspective. $12.15. That's also this equal low over here, this equal high over here, which is tested right now. So where the yesterday buyers, someone can ask. Okay, pound is cooling off as well. There are some nice stops probably below previous hour low, but it's gonna be tough to make it based on the breakdown trading, based on the break, because not a lot of space, right? So from the very short-term perspective, it would be better to see the retest of 26.90. That's okay, that's what they did. Yeah, there is a little bit of attempt to bounce here on euro pound, so that might be the case with this 12.23 on euro dollar. We'll see. I'll go live this attempt to create the channel. So they're trying to counter this move. But what is the important right now development? We are below the daily open. And even if that's the case, if you remember from the 15-minute chart, am I right? Yeah. The line related to the daily open 12.43. So even if we are gonna try to trade, so the top of the channel is around 12.43 right now. And then it's a continuation here. The pound is trying to break lower. Let's watch a few more minutes, and then we will switch to indices. I've mentioned this morning, we have to start from the bulls perspective. We have to start to fight, right? And yeah, there is a fight right now going on. Of course, plenty of things has to happen. The best best thing is to get back above the weekly open. That would be nice reversal, but more important is to get back and close above Monday high. Am I right? No. Above this zone here. Monday high is no, sorry, about this previous demand which hold us here, right? So that's where we have to get back above. Bears, comfortable situation as long as we are below weekly open. Could be challenge once we are gonna to get back with daily close above weekly open, some kind of the reversal, but right now it's, and that's the main supply in my opinion, intraday main supply. Let me have a look. That's the breakdown from here, right? So it looks like that's intraday supply, and it hasn't been tested yet. Also, Aussie is starting to doing well. If you haven't watched, that's the few comments in regards to the Theresa May and President Trump press conference. So taking into the consideration these two lower shadows over here after the head of RBA comments, I do expect some stops below that levels, and if and when and if we are gonna to get back below this level, we might speed it up towards the first target. And it's a first 15 minutes of the new hourly candle, but if we are talking about the 15-minute chart, right? So the upper shadow here, the previous upper shadow in relation to the weekly open, as you can see, there is still some visible supply around these levels. But on this short-term time frame, it's still chance we are going to see the pullback and retest of the 108. We'll see. Because looks like I'm checking Nasdaq. Looks like we are going to have a attempt to gap higher on the indices, and yeah. I'm going to delete soon this size of the moves and corrections, right? Because looks like, if I'm not mistaken, it looks like that's the biggest right now. So looks like we are breaking. So now I'm going to look for some. It might be some kind of the reversal, but let's wait for cash open. So let me clean that chart. Okay, so there is only one thing I missed within this puzzle here on the Nasdaq. Overall, what we are discussing, it was the break of 7,260, 7,210 based on the chart I'm using, right? But overall, we were discussing this head and shoulders here, right? The break of that is gonna bring or expose the latest Nasdaq weakness, right? Something we've seen here on the 12th of December 2018, right? And that's the latest puzzle I am missing here. Maybe, just maybe, we are going to retest weekly open on something like, or maybe we are going to retest 7,200. The neckline, the broken level, that could be the case as well, right? That would be nice to see them rising there. Why I'm missing the latest puzzle? Because if we are going to see the failure here, right? That's the biggest correction almost. So then the size of the move from here would bring us towards the correct target as well as possible demand zone based on the higher time frame. So that's the only missing puzzle here, right? But you know, invisible hands, invisible market hands, we're trying to avoid the crash, right? So we know where we are, we know what we are looking for, so I'm going to delete this as well. Just the reminder, we have a Powell, it might be the reaction ahead of the Powell, some short covering. Trying to break lower here. I wouldn't say we are done yet, but I'm not gonna discuss with the market, especially market doesn't know that I'm existing, I'm still exist. Yeah, because of the empty calendar, and because of those two events later this week. We are slowing down a bit right now. So if we are gonna to get above, because we are talking about this as well. Yesterday, pre-market lows, equal lows, right? Broken, retest, and lower. So in case, yeah, we really go through after the cash open, it might be very interesting. First, let's check where we have yesterday open, and we are trying to open a little bit higher, am I right? Or no? Did I miss something? No, these are not levels I've been looking for. That was the April. Yes, that's where it was. So that's the first 5 minutes, and we have to, because it's a question of a retest yesterday cash market open. That's also weekly open, right? So it might be question of retest. So where we are, yeah, it still might be. Some short squeeze. We took out some stops over here, and we are holding this zone. Wait. So that's even more important here. So let's have a look what we have from the news perspective. There is nothing new. No, just looks like President Trump is repeating himself. Looks like trying to figure it out, this pound moving. I'm trying, there are any news from the tens, but cannot see. In relation to, you know, new prime minister. If Deutsche Bank is plus 3% right now, meaning there is a huge risk on. Yesterday probably, is, if I'm not mistaken, or earlier today, it was first time below 6, right? Ooh. Unfortunately, it's not confirmed source, but looks like Trump says we will have an agreement on Huawei, and we are going to be able to work out differences on Huawei. We discuss it. All right. So probably we know the latest rally could be related into that. And here is in relation to the trade deal with UK. All right, in the meantime, let's have a look what we have in US, the cash open. Few seconds left. As usual, we are going to watch first 5 minutes range and then, okay, so there you go, that's the open. I wonder if it's going to be the lowest cash, the lowest level during the cash market. We'll see. So let's watch for a while. Okay, at least there is attempt to make move below cash open. And if we can hold Of course, it's a 1 minute chart. If you are a crypto fan, crypto watcher, you're more than welcome to visit the Global Light Forex YouTube channel. I recorded earlier today, I recorded short recap of Bitcoin versus dollar and Ethereum versus dollar. We already started the separate videos, recordings. That's what I've been talking about in May, right? Okay, so that's the low here. Ooh, so that might be the reason of the latest pound rally. President Trump, I refuse to meet Corbyn, says Corbyn is somewhat a negative force. Jeez. So we have the good open in US, but something has to happen to the downside, right? Again, it's not only me who is missing the puzzle, right? So the sellers may try to, completely different thing is if they are going to be able to do that, but we'll see. On the other hand, the bulls will try to trap all these latest sellers from yesterday, right? And there might be huge short squeeze. All right, that's the first 5-minute trading range. Let's make one measure. Let's make one measure, the whole range. And if we are going to try to break to the downside, where we are going, yeah, that would be nice to hit these stops. And what else would be here? That would be the retest. Yeah, that would be nice. So we have attempt to break lower here with huge rally. So I would expect some demand here or right after the stop hitting right below here. So let's put one more line. So we have supply, which these two yellows, which been hit ahead of the cash market open, pullback, retest after the cash, and we are going lower. All right, let's have a look what we are going to have. I'm thinking about this half of the day risk on. And the reminder, Powell is within the next 9 minutes during our second break today. So I'm going to watch the price action around the Powell, because once we are going to retest the bottom of the channel on euro dollar, it's gonna be retest of this 12.22, 12.15 level, and as I mentioned, that might be the key. So after the break, we are going to check what is going on after the Powell, and we will try to make the summary of the first part of the US session. So what we have here after the cash open? We had the huge drop. We had another huge drop. We hit few stops, but it still might be lower from here, right? Because on the other hand, the bounces, were they similar? Oh, almost. And in that case, with one more time of the same size, we are going to hit the levels I'm going to watch from the long perspective. So 7,000, 27,000, right? I'm not saying I'm gonna be in, I'm saying I'm gonna to watch. As we may want to hit some stops ahead of the Powell, and then some kind of the sudden rally out of the nowhere, call it short squeeze. Anyway, time for a second break. Bar is open, coffee, tea, non-alcoholic drinks. Charts are staying with us. I'll be back around the top of the hour. Just a reminder, with the next different calendars saying different things. I got like 15:45 and seen also 15:55 PM CET as a time for Fed head Powell. Enjoy the break.
central bank in a democratic society. We have the obligation to inform democratically elected officials, their staffs, and the public about how we expect to achieve our policy mandates. This reinforces that the Federal Reserve is accountable for how its efforts work out. So it is quite fitting that this conference includes panels about what our employment mandate looks like in the communities that we serve. And it is appropriate that our discussions go beyond the usual headline macroeconomic analysis to also consider how monetary policy actions are transmitted through individual households and businesses to the broader economy. I've been at the Federal Reserve for 28 years, and I can attest to the fact that our FOMC communications have not always been crystal clear. As Chairman Alan Greenspan famously joked in 1987, "If I seem unduly clear to you, you must have misunderstood what I said." But the jokes aside, during his long tenure as chairman, Alan Greenspan acknowledged the importance of explaining Federal Reserve actions, and he spoke a good deal about them in many public forums. Several important communications innovations occurred during Greenspan's leadership, and further substantial improvements were made under the leadership of Ben Bernanke, Janet Yellen, and now Chair Jay Powell. A very important landmark was in January 2012, when the Federal Open Market Committee published a long-run policy strategy statement. This document formally stated our intention to pursue a balanced approach to achieving our dual mandate objectives of maximum employment and price stability. Our inflation objective was explicitly defined to be 2% annual inflation as measured by the price index for total personal consumption expenditures. One of my most gratifying experiences as Chicago Fed president was serving with Charlie Plosser, Sarah Raskin, and Janet Yellen on the FOMC Communications Subcommittee that developed this strategy statement and other innovations, notably adding interest rate projections to the summary of economic projections. And of course, communications subcommittees after ours worked on many important improvements, such as clarifying that our inflation objective is symmetric around 2%. More work to do. The Fed and other as the strategy document and enhanced SEP are, there's more work to do. The Fed and other central banks have experienced the constraints on conventional monetary policy posed by the zero lower bound, and the reality is that we now live in a world where the odds of revisiting the ZLB are too high. This requires fundamental review and reassessment of our monetary policy framework and strategy. This is a challenging and exciting endeavor. The excellent papers prepared for this conference, the panel discussions, and our Fed Listen sessions throughout the United States promise to be critical and foundational elements for our FOMC discussions. So it's now my pleasure to introduce Chair Jay Powell. As you all know, following a distinguished career that spanned the private, public, and nonprofit sectors, Jay joined the Federal Reserve as a governor in May of 2012, and then became chair in February 2018. Interestingly, Jay has spent one half of his Fed career with policy rates at the zero lower bound. So he is well attuned to the challenges the ZLB raises for reaching our policy objectives and the paramount importance of facing the issue head on. Jay was the driving force behind this reassessment of our monetary policy strategy, tools, and communications. Of course, Jay has not waited for the outcome of this review to take action. Notably, he's been a champion of enhancing our communications. The Fed chair now holds press conferences after every FOMC meeting, and Jay is moving us forward on the Fed Listens project, which includes this conference as well as community forums at all 12 of the regional Federal Reserve banks. So welcome to Chicago, Jay. We're very glad to have you here, and the floor is yours.
Thanks very much, Charlie, and good morning, everyone. I'm very pleased to welcome you here today. This conference is part of a first-ever public review by the Federal Open Market Committee of our monetary policy strategy, tools, and communications. We have a distinguished group of experts from academics and other walks of life here to share perspectives on how monetary policy can best serve the public. I'd first like to say a word about recent developments involving trade negotiations and other matters. We do not know how or when these issues will be resolved. We are closely monitoring the implications of these developments for the U.S. economic outlook, and, as always, we will act as appropriate to sustain the expansion with a strong labor market and inflation near our symmetric 2% objective. My comments today, like this conference, will focus on longer-run issues that will remain even as the issues of the moment evolve. While central banks face a challenging environment today, these challenges are not entirely new. In fact, in 1999, the Federal Reserve System hosted a conference titled Monetary Policy in a Low Inflation Environment. And I know some of you were at that conference as well 20 years ago. Conference participants discussed new challenges that were emerging after the then recent victory over the great inflation. They focused on many questions posed by low inflation, and in particular, on what unconventional tools a central bank might use to support the economy if rates fell to what we now call the effective lower bound, or the ELB, or the lower bound. Even though the Bank of Japan was grappling with the lower bound as the conference met, the issue seemed remote for the United States. The conference received little coverage in the financial press, but a Reuters wire service story titled "Fed Conference Timing on Inflation Odd but Useful" emphasized the remoteness of the risk. Participants at that conference could not have anticipated that only 10 years later, the world would be engulfed in a deep financial crisis, with unemployment soaring and central banks around the world making extensive use of new strategies, tools, and ways to communicate. The next time policy rates hit the lower bound, and there will be a next time, it will not be a surprise. We are now well aware of the challenges that the ELB presents, and we have the painful experience of the global financial crisis and its aftermath to guide us. Our obligation to the public we serve is to take those measures now that will put us in the best position to deal with our next encounter with the lower bound. And with the economy growing, unemployment low, and inflation low and stable, this is the right time to engage the public broadly on these issues. The review has several parts, all of which are intended to open our monetary policy up to critical examination. We're holding a series of Fed Listens events around the country to help us
It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Light Forex Social Trading. Spend your time doing what really matters to you.
Productivity growth, questions that are also with us today. The big difference between now and then is that the federal
Hi guys, welcome in our third
which to
part.
underscore the point, put the rate 20
There is a Powell in the background, probably you can hear.
Since then, standard estimates of the longer-run neutral rate of interest have declined between 2 and 3 percentage points.
So let's watch and see. There was a
larger.
max of this spike to the upside was 66. As you know, I'm waiting at 70, so I missed by 4 pips. But I think we are going to see higher levels, a little bit higher. Unless the top of that channel is going to hold right now, right?
Economic weakness puts downward pressure on inflation,
the thing
which
is,
can raise real interest rates and reinforce the challenge of supporting
the reaction, what Algo read was act as appropriate to sustain expansion. That's what Powell said, and that's what Algo reacted at, right? That was the reaction on that act as appropriate to sustain expansion. But looks like
Using
slowly
monetary
we are
policy to
getting
push
where we were.
sufficiently hard
We are
on
getting
labor
back
markets to
where we
lift
were.
inflation could pose risks of
So let's
destabilizing
listen for a
excesses
while,
in financial markets or
Mr.
elsewhere.
Powell, and then
In
let's
short,
try to summarize the
proximity
day.
of interest rates to the effective lower bound has become the preeminent monetary policy challenge of our time, tainting all manner of issues with ELB risk and imbuing many old challenges with greater significance. For example, the behavior of inflation now draws much sharper focus. When nominal interest rates were 4 or 5%, a low side surprise of a few tenths on inflation did not raise the specter of the lower bound. But the world has changed. Core inflation is currently running a bit below 2% on a trailing 12-month basis. In this setting, a similar low side surprise, if it were
In
to
the
persist,
meantime, US factory
would bring
orders
us uncomfortably low,
a
close
little
to the
bit
effective lower bound.
better than what market
My
was
FOMC
expecting.
colleagues and I
Previous
must and do
reading was
take
revised to
seriously the risk that
1.3.
inflation shortfalls that persist even in a robust economy could precipitate
Now,
a difficult to
the
arrest
current
downward drift
situation
in
is
inflation
changing a little
expectations.
bit what is going on here.
At the heart of the review
What I
is the
mean by that,
evaluation of potential changes to our strategy
we hit the stops
designed
to the upside,
strengthen the
right? So we
credibility
are
of a
ready to
symmetric
go
2%
to
inflation
go
goal.
lower. So now
The
it's
ELB
time for
problem
these
also
stops we were
complicates
discussing
the
before the
FOMC's
break.
efforts to achieve
22
transparency
towards
and accountability.
12.22,
The Fed,
12.15, we'll
like
see.
most major central banks, is insulated from short-term political pressures. In our democracy, that insulation carries with it an obligation.
It might
for
be
us to
some
be
kind of the
transparent.
attempt to position
When policy rates
themselves
reach the
towards the
effective lower bound during the
Thursday
crisis, central
ECB.
banks resorted
So
to what
in
were
case we are
then
going to
new
see
untested
stronger move to
tools
the downside,
pursue
let's
their
say stronger
mandate
move to the
goals.
downside today, tomorrow,
These tools are no longer new.
I wouldn't be
But
surprised to
their
see some kind of the profit
efficacy, costs, and
taking
risks
even
remain
with
less well understood
dovish
than
Draghi,
traditional
right?
approaches to
From the
central
short-term perspective, we'll see.
My FOMC colleagues and I are committed to explaining why the use of these tools in the wake of the crisis was a prudent and effective approach to pursuing our congressional mandate, and why tools like these are likely to be needed again. Our review is
Also,
but one part of our
I'm
efforts to
checking what is
engage
going
with the
on,
public on these matters.
because
Let me
Trump
turn now,
said
to the specifics
who is
of
going
the
to be
review,
good
which is
prime minister in the UK, who is
first,
not.
can the Federal Reserve best meet its
That's
statutory
funny,
objectives with its existing monetary
but it
policy
might be
strategy, or should it consider strategies that aim to reverse past misses of the inflation objective? Second, are the existing monetary policy
also
tools
watched
adequate
from
to
the pound
achieve and
traders
maintain
perspective.
maximum
I'm
employment
checking.
and stable prices, or should the toolkit be expanded? And third, how can the FOMC's communication of its policy framework and implementation be improved? These questions are quite broad, and my colleagues and I come to them with open minds. We believe that our current policy framework is working well, and we've made no decisions about particular changes. In fact, the review is still in its early stages. The first question raises the issue of whether the FOMC should use makeup strategies in response to ELB risks. By the time of the 1999 conference, research was beginning to show that, in models at least, such strategies could substantially reduce the unemployment and other costs of ELB spells. The simplest version goes like this. Suppose that a spell with interest rates near the effective lower bound leads to a persistent shortfall of inflation relative to the central bank's goal.
Also, on the Nasdaq, there is
What if the central
a
bank
fight going
promised
on. If you
credibly
remember
it would
what we
deliberately
discussed,
incorporate lost
the bounce
inflation
over here is
by
that
stimulating the economy and
a little
temporarily
bit
pushing
bigger than
inflation
what
modestly
we've
above
seen,
target.
as far as I remember
In the
here,
models,
right?
the prospect
So
of
it's
future
still from
stimulus
here.
promotes
It guy,
anticipatory
we
consumption
may
and
get
investment
this
that could
missing
greatly
puzzle
reduce the pain
based on
of
the
being
size
effective
of
lower bound.
move to the downside, right?
Policymakers discussed
That's
this reason
the
in the
thing
wake
we
of
are
the
talking
crisis,
about.
but neither the Fed nor any other major central bank chose to pursue such a policy.
Don't forget about it. So there is a
For makeup strategies
interest
to
on
work,
both sides
households
here,
and
right?
businesses must go out
It's
on a limb, so to
it's
speak,
almost like
raising spending in the
almost
midst
we
of a
there
downturn.
from the bull's perspective
In
to
theory,
trap
they
the
would do
bears
this based on their
sellers and to
confidence
try
the central bank will
to
deliver the makeup
initiate
stimulus
the
at some
short
point,
squeeze. On the other hand,
perhaps years in the
bears are
future.
sitting
This is quite a flattering
and
assumption.
trying to defend this line.
And in models, great confidence is achieved by assumption. Despite the flattering nature of the assumption, crisis-era policymakers had major questions about whether their promise of good times to come would really have moved the hearts, minds, and pocketbooks of the public. Part of the problem was that the groundwork had not been laid in advance of the downturn, a problem we could hope to fix well before the next time. Policymakers also had deeper concerns about the legitimacy and effectiveness of attempting to bind some future FOMC to take actions that could be objectionable from a short-term
All
perspective.
right, let's start slowly to summarize the day.
Research on makeup
Next
strategies
is
has begun
London
to grapple
fixing.
more seriously with the credibility
I'm
questions,
going
but
to
important questions remain.
turn off
To
Mr.
achieve
Powell.
buy-in
I'm
by
sorry, Mr.
households
Powell. So let's try to summarize the day. Anyway, missed. It's shame I missed twice selling opportunity on euro dollar. One was what I've been explaining based on the morning, and here once I've been waiting at 70, we hit 66 right on the spike. So looks like I missed twice. Anyway, still 12.22, 12.15 as the intraday key to the downside. So that's what I'm watching. That's what I'm looking for, right? Then pound. So we are trying, pushing higher, hitting another stops, right? But again, I'm not interested. Probably lower than 27.50ish. That's the levels related to yearly open, right? And that would be beauty, if not the most, this over under, right? So there is a nice liquidity pool over here, over under, nice. On the other hand, where bulls might try to step in case of the in case we are going to see lower levels. I think that low of the day today, with some stops towards eventually towards weekly open. So in case bulls wants to see higher prices, I think we should hold something in between 26.42, 26.26. Right, but as I mentioned, in case of the long pound, I think I do prefer euro pound. And again, I've been waiting, or a little bit higher. Looks like I might to review the sell order and move lower towards 88.75. Right, as I think we are gonna to hit this. Yesterday, New York, that's the New York? Yeah, that's the New York low over here, late European New York low here. And in that case, once we are gonna to break through that level, we may try to retest at least weekly open, right? So I'm going to watch carefully euro pound, and if I have to choose, if I like pound longs, right? But I have a possibility to choose, so my choosing is gonna be euro pound instead of the pound dollar. But once we are going to hit 27.50, I might decide to short cable, right? I'm half short Aussie USD and looking to add above 70 with stop for both above 70.30. All right, based on RBA, based on the RBA head statement, and based on this intraday price action. Now it's time to check the crude in relation to USD CAD. All right, that's what we were supposed to do during the second part of the meeting. So again, because I briefly went through the oil during the first part. So overall, what we are doing right now, we are testing this from the daily chart. We are testing this one of the latest weakness seen on the oil when we are falling towards 43 over here, right to the left. So as you can see 13th of December, right, and then move to the downside. Okay, then once we move through that level, all right, this range we're holding here, and we saw this huge rally. Now we retest that level. I do believe some stops are below 51.70, all right, and the bottom of that range we are talking about something close to psychological 50 level. So I would be very careful with eventually once the risk off is back, right, we might see things speeded up here to the downside. But 1 or 2 days of the bounce may bring 56.70 into play. That's what I've been explaining as well. That's the low from the 29th of May, and based on the weekly, that's also the latest base, which were the jumper for this longs, right? So that's the latest base, and here, as you can see, we are talking about 56.90, right, the opening level over here, and something closer towards 57. So 56.50, 57 from the higher time frame as a possible supply, and possible demand around current level, and down towards 50 from the higher time frames one more time. Here from the intraday perspective, I don't think we are done with some lower levels, right? So what I would like to see here is attempt to try to break out of this, let's call it consolidation, if we can call that one as a consolidation, right? I would like to see attempt to break higher, to double that range. That would bring us towards 56.70. That would be nice also from intraday perspective, right? Because we would hit the levels we were discussing a second ago based on the weekly and daily. So that would be nice. But it might be that the first attempt is gonna be lower and rejection, right? So the sellers might be trapped here, and we might see rally. So in case we see stabilization around the current level and above 50 on oil market, it might work if we want to compare with the USD CAD or overall Canadian dollar. It might support Canadian dollar, right? So where we are with Canadian dollar, finally we hit some supply we were discussing quite some time ago, right? Based on the price action from late 2018 December, right? Huge sell-off. We hit on Friday that supply, and strong rejection, right? It's similar to what we've seen 22nd of May, but opposite direction, right? We hit the stops to the downside, and now we hit the stops to the upside. I wouldn't be surprised we are going to hold either, if we are talking about the opening levels, that we are going to hold, Jesus, the close from that day. What the? Okay, I'm not gonna be surprised if we are going to hold 140.34, all right, or if we are going to retest the low, so something closer towards 33.50. That's not gonna surprise me, all right. It might be a little bit wider range over here. Dollar yen, we have to hold that low, all right, related also to 10th of January. We otherwise breaking through today's and yesterday low, we are opening 107.20, and then I don't know, 105 and then 100. So simply somehow, I don't know, invisible hands of Bank of Japan, but I wouldn't be a seller here. I do prefer to see retest of that range, right? So I'm talking about the last Friday here on dollar yen, right? So that's what I would like to see. So maybe 50% of that range, right? That would bring us towards 109 and towards this previous demand which was broken last Friday, right? So I would expect some kind of the supply in that case here. So yeah, I'm gonna to skip the short side for now, but in case of the continuation of positive tone on the market, I might look for some yen crosses to the upside, okay? And it might, this statement may not be related to the euro yen, because I think Mr. Draghi will try to save the world, meaning he will try to send euro lower, DAX higher. So yeah, we might see euro yen lower. But for example, pound yen looks not bad, as the pound is looking overall a little bit better. So yeah, I might look for yen crosses to the upside, right? Of course, there should be dollar Chinese yuan in the background, especially that what I've already put into the chat window, that the Chinese yuan dropping below 7 to the US dollar is no longer forbidden zone, right? And I provide you the link to the analysis. So yeah, that might be the tool for PBOC, right? To try to weaken the yuan. Of course, that might be immediately countered by the US Treasury that, yeah, China is the FX manipulator. But I think at some point, once, if we are not going to resolve current issue ahead of the summer holiday, then we have to remember that yeah, after the summer holiday, closer to the November, it's gonna start all this election campaign, and then most probably we are gonna to see that resolving almost all issues is simply possible, right? And just to ensure that the next elections are gonna be related with the stocks bull rally. In that case, Mr. President Trump is going to have a chance for re-election. Okay, so let's watch for a while, especially this euro dollar. Higher, lower, higher, retest, but trying to hold the top of this channel. So let's watch for a while. Actually, that the summary, it's what I have to say, what I was looking for, what I'm looking for the rest part of the day. It might be that they will try to create some kind of the flag here. No. We are fighting around this daily open right now, and you know, with again, I have to repeat it again. We have two important events this week. It's a ECB on Thursday and non-farm payrolls on Friday, and that's where we might get short-term directions from both, right? From both. And just friendly reminder, we are going to cover both events live. Thursday we start 1:15 p.m. CET, 1:15 p.m. CET, and Friday 2:15 p.m. CET. Alright guys, that's it from me. I'm going to watch for a second this euro dollar. Don't be trapped. Thank you very much for your time. Enjoy the rest of your day. Have a great one, rest of your day, and see you again tomorrow.
It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Light Forex Social Trading. Spend your time doing what really matters to you.